Now, every fall, you get the annual pension statement. It's that purple form that you get through your district. Okay. It's important to look at that each year and look at the information contained on your benefit statement. It will list your service as of June 30th of the prior school year. It will list your contributions, how much money you've put in. It will list your enrollment date, the date you came into the pension fund. It will list your active life insurance on that form also. So I encourage you to review that every time that you get it. For New Jersey, withholding is voluntary. Like I said, you're not subject to New Jersey tax until you recover your contributions. There is a additional exclusion for New Jersey tax purposes at age 62 or disabled. And in 2003 and beyond, if you file married filing jointly, it's $20,000, single $15,000, married filing single is $10,000. But in New Jersey, effective with 2005, you lose that exclusion if you have gross income of $100,000 or more. They eliminated it back then. Pension loans. You can retire with a pension loan. You have a choice of paying the loan off in full, or you can continue the loan in retirement and they will deduct the repayment schedule each month out of your pension check until the loan is satisfied. The one thing you can't take into retirement, if you're purchasing service, buying time back, that payment must be paid off for that service account before you retire. Okay, you decide you want to file for retirement. You want to retire. There's a timetable that they recommend you start doing things so that everything gets processed on time. They suggest that you attend a retirement seminar 6 to 8 months before your retirement. Get a retirement estimate. See what your benefits will be. 4 to 6 months is when you should file your application. Complete the application, provide proof of age if you haven't done that already. On your purple form, there's a box that says proof of age. If there's an X in that box, they have it on file. If there's no X, they'll need it. And if you pick a beneficiary option, proof of the beneficiary's age. They'll take a birth certificate, a plain old copy is fine, doesn't have to be a raised seal copy. They'll take a copy of a passport. There is an employer certification. That's also in the retirement application. Your school district, your business office, or payroll office must tell the division what your salary is going to be to the day you leave, because they have to certify that that's going to be the final salary so they can begin processing your pension check. They do acknowledge receipt of your application. So whether you apply online, which you can do now, or you mail it in, they will acknowledge that they received it. Normally, by mail, you're looking for that in about a month. 3 months before your retirement, once you've applied, you got your letter acknowledging that they got it. That's about 3 months. That's also when you're going to get the health benefit offerings for your medical. That comes in a separate big white envelope. 2 months before retirement, they're going to quote your retirement numbers. That quotation is after they've received the certification of your salary from your district, and that's the hard number. Before that, if they give you an estimate, they're assuming that those are going to be the numbers, but this is the hard number at that point. If you have any loan, they'll quote you the payoff balance, and if you're purchasing service, what the quote will be to pay that off. A month before you retire, your retirement is presented to the trustees of the pension fund. In this case, the trustees of the Teachers' Pension Annuity Fund. And once they approve you, you have 30 days from the approval date or 30 days from your retirement date, whichever is the later of those 2 dates, to change your option, cancel your retirement. You could send in the form that changes those things. You could change the date, you could change the option, you could cancel your retirement if you wanted to do. But canceling your retirement does not guarantee you that you're going to be reemployed by your Board of Ed. Now, if you're applying ahead of time, they will take an application up to a year in advance. It used to be 2 years. By applying a year in advance, you can still make those changes. You can apply 4 months and still make those changes. But the letter that you give your Board of Ed, and by law you're required to give them 60 days, once the Board of Ed accepts that letter, you're at their mercy if you want to change your date. They could say, you've entered into a contract with us to go, you're gone. So before you ever give that letter to your Board of Ed, make sure you're going on that date. Shortly after your retirement, you will get a statement of your retirement allowance. That's an important letter. I suggest that people make multiple copies. Put one in your safe deposit box. Put one with your will if you have one. Because in that tells your retirement, your pension, who your beneficiary is, what your retired life insurance is, who are the beneficiaries for that. It also includes in there the amount of your contributions. So when it comes time to do your taxes and you need to know how much you had put in, that information is there. You get the forms for withholding from the federal and state. You get a direct deposit form, which is now contained in the application itself. And your first retirement check is dated the first of the month or 30 days after your TPAF approval, whichever is later. So if you were going to retire July 1, and you've been approved before that, your first check comes August 1. You're always a month behind in your pension check. Upon your death, your last check gets reissued to your beneficiary. Your pension will grow based upon the cost of living in retirement. The first increase or adjustment comes on the 25th month after your retirement. So if it's July 1, first check comes August 1. 2 years from that date is the first increase in with the cost of living. It's based upon the Consumer Price Index, the CPI, and it's always 60% of what that is. And there's a formula that calculates that number. Last year for the pension fund, there was no increase in the COLA. There was no increase in Social Security benefits either for people. And that's the first time that's happened. But it will grow over time. And it's 60% of whatever the cost of living is. There's a formula that calculates that. There's a 4 or 5 step math problem. But you can see if we had a member who retired in the year 2000, as an example of how much does it grow with the COLA, this member, if they had a benefit, a monthly benefit of $1278.35, the monthly benefit for 2009, which was a year ago, remember, because there wasn't one, that member's pension has grown to $1462.45, based upon the amount of the pension check, the COLA, and the increase.